Still, that sector, as the Bankers Committee of the Central Bank of Nigeria met earlier on Thursday to deliberate on some contending issues and how they affect the entire economy. Some of the issues highlighted at the meeting include foreign exchange scarcity, surging inflation rate, improving non-oil exports, amongst others. It was also an opportunity to monitor and evaluate some of the policies of the monetary policies of the Apex Bank and its impact on the entire economy.
Part of what this will also do is ensure that the excess funds with us as banks as a current account is kept safely for customers to the point where it will only be released when truly needed. And so for us as banks, we're in support, and we believe that everybody within the country should understand the move behind the decisions that have been taken.
The operational effectiveness of this card is expected to be robust, and it should drive a lot of innovation, standardization, then full end-to-end visibility to improve fraud management, and better dispute resolution process around the card operating system. Local competence for the card and payment scheme will also be deepened within the ecosystem. Again, improved sovereignty and security of our data and operations, which will be locally based.
At the end of Q3, September, the total amount repatriated was $1.28 billion for the quarter. And out of that, the total amount sold into the IME window was $870 million, which ended up in terms of rebates that was paid by the central bank. And you may be familiar that rebates are paid 65 naira to the dollar. 42 billion naira in rebates have been paid in the third quarter. So we were very pleased to note that if you look at the amount of foreign currency from non-oil export proceeds, it's shown a very pleasing year-on-year increase.
Well, thanks for staying with us here on the News at 1. It's time to talk business. The Central Bank of Nigeria and the Asset Management Company of Nigeria, AMCON, have announced the completion of a share purchase agreements for the acquisition of 100% of the equity in Polaris Bank by Strategic Capital Investment Limited. Polaris has been operating as a bridge bank since 2018, when the Central Bank of Nigeria intervened to revoke the license of the former Skybank PLC and establish Polaris Bank to assume its assets and certain liabilities. As part of the CBN intervention, consideration bonds with a face value of 898 billion naira, future value of 1.305 trillion naira was injected into the bridge bank through AMCON to be repaid over a 25-year period. These actions were taken to prevent the imminent collapse of the bank, enable its stabilization and recovery, protect depositors' funds, prevent job losses, and preserve systemic financial stability in the bank. Well, meanwhile, the Central Bank of Nigeria, in collaboration with the Nigeria Interbank Settlement System and the Bankers Committee, has disclosed the plans to implement a national domestic card system effective January 16, 2023. It was also revealed that the central bank's FX policy, which aims to raise $200 billion from foreign exchange earnings from non-oil exports over the next 3 to 5 years, has continued to yield dividends, as it has recorded $1.2 billion in repatriation, $870 million sold through the investors and exporters IME window, and 42 billion naira paid as rebate. Speaking of the plan to launch the National Domestic Card Scheme, the Chief Executive Officer of NIBSS, Mr. Premier Oiwoh, stated that the initiative being vetted by the CBN and the Bankers Committee would enhance financial inclusion and create solutions to improve card ecosystem innovations in the country. The suspension of the telecoms tariff until recently, when it was resolved, he said, would pose a great challenge to meeting the target, adding that the delay and the collection of carbonated drinks tax may also pose another challenge. Into the oil and gas sector now, Shell Petroleum Development Company Limited has resumed crude oil exports at the Forcados Oil Terminal. The resumption of operations at the 400,000 barrels per day export terminal came ahead of the October 30 schedule, but the oil giant had reaffirmed that the essential repairs would have been completed. A spokesman for the company, Mr. Bamidele Odugbeso, confirmed the developments to newsmen, revealing that essential repairs at the terminal are complete and export operations have resumed. According to the Group Chief Executive Officer of the Nigerian National Petroleum Company Limited, NNPCL, Mr. Melekiari, there is also some hope for the addition of 500,000 barrels per day of crude oil to Nigeria's daily output by the end of November to earn more revenue to finance the 2023 budget. Let's turn our focus now to global markets as Asian shares tracked Wall Street lower today, while Treasury yields scaled 14-year highs as the prospective aggressive interest rate hikes from the Federal Reserve and recession risks soared investor sentiment. MSCI's broadest index of Asia-Pacific shares outside Japan was down at 0.55%, but above the 2.5-year low it touched yesterday. Australia's share index lost 0.74%, while Japan's Nikkei opened 0.38% lower. And China's stock market opened at 0.1% higher today, with Mr. Xi Jinping set to clinch a third 5-year term as China president. Well, the pound fell against the dollar on Friday morning, that's today, as new figures showed a gloomy picture for the United Kingdom's economy. Sterling dropped 1% against the dollar to $1.11 after rallying on Thursday as Prime Minister Liz Truss resigned. It came as official figures showed government's borrowing rose to its second highest on September on record. Meanwhile, people are shopping less than they did before the coronavirus pandemic. That's according to figures from the Office for National Statistics. Retail sales fell by more than expected last month, dropping $1.4 and continuing their slide from August, official figures showed. The pound's latest slide comes after a period of volatile trading for the currency. Let's turn to Asia now. In Japan, where core consumer inflation rates accelerated for a fresh 8-year high of 3.0% in September, challenging the central banks are resolved to retain its ultra-easy policy stance as the yen has slumped to a 32-year lows that continue to push up imports costs. The inflation data highlights the dilemma the Bank of Japan faces as it tries to underpin a weak economy by maintaining ultra-low interest rates, which in turn are feeling an unwelcome slide of the yen. The increase in the nationwide core consumer price index, which excludes volatile fresh food but includes fuel costs, matched a median market forecast and followed a 2.8% rise in August, while it stayed above the Bank of Japan's 2.0% target for the 6th month and was the fastest pace of gains since September 2014, data showed on Friday. Let's wrap things off now with prices on the international markets as it slipped today, and we're heading for a second weekly decline as investors weighed the impact of sharp interest rate rises on energy consumption, offsetting hopes of higher Chinese demand and output caused by OPEC and its allies. U.S. West Texas Intermediate crude fell to the red zone to sell at $84.02 per barrel, with a price decline of 0.30%. And Brent crude futures also experienced a downward price margin of 0.21% to sell at $92.19 per barrel. The bottom line sells for $93.62 per barrel, with a price surge of 2.88%. And for the OPEC basket, crude oil dealers are offering $89.29 per barrel, with a price decline of 1.68%.